How do you prepare a business for equity investment? Or restated, how do you get a business ready to go out and search for and receive equity investment? Well, you have to focus on what investors are looking for in a startup venture that they're going to invest in. And if you can assimilate yourself to that as much as possible, it drastically increases the likelihood that you will find investment or funding. So the first thing investors are going to look for is product market fit. Your value proposition. It has to have an established place in the market. It is clear the value proposition that it is solving for the particular customer, client, or end user, whatever segment or target market it is focusing on. The value proposition has to be clear, and there needs to be demonstrable traction in the market for that value proposition. Okay. Two, that value proposition needs to be a entirely repeatable model. That is, you create it one time and you can rescale it over and over, because that is the only way it is going to be scalable, right? You create the value proposition once, sell it multiple times. That way you can reach a lot of people, scalable, with the same value proposition. So this is a very important point, because that is going to be the ceiling, the hurdle that a business has to get over to make certain that it can expand as fast as investors would like to see it expand in order to return the potential return on investment that investors are looking for. So repeatable and scalable business model. Okay. The business team. The business team needs to be solid, have a good track record. There needs to be no infighting. The chain of authority needs to be clear and inspiring, if you will. The investors invest in people as much as they invest in ideas, so they need to have confidence that the people in charge of the venture that are shepherding their money will do so in an effective and efficient manner. Okay, so again, establishing a business team that inspires confidence. Okay, next, organizational documents. The organization has to be put together. Investors are generally going to want the business to be reorganized and the articles of incorporation restated again. If the business is not yet a Delaware corporation, it will probably have to reorganize as a Delaware corporation and authorize the preferred convertible participating stock that the investors want, that has the characteristics that are negotiated in the term sheet negotiations. So having this in place, making certain there's at least a plan and path forward for the reorganization. That means looking at the existing organizational documents and make sure all of the internal structure is established. There are no holes there that could cause the business disruption in any way. And there are so many corporate governance issues that could arise by not following the procedural formalities necessary to secure all internal business operations. So there'll be, again, an important focus on the organizational documents. Financials and taxes. You're going to have to make certain that all of the financials are in order, meaning that all revenue is adequately recorded, all spending is adequately recorded to demonstrate what the revenue potential is, what the revenue history is, and the current state of affairs in the business. Costs are difficult because businesses early on tend to just buy what they need, and classifying that as a recurring cost versus a one-time cost, and whether it was an expense or whether it was something that's going to be depreciated over time for tax purposes and things like that, that needs to be taken into account and clearly stated. So getting your financials in order, working with your accountant to make sure it's presented in a logical fashion that demonstrates the true financial state of the business at the time of investment. And then any legal disputes. If there are controversies between owners, if there are contractual matters, if there are intellectual property claims from outside, if there's any potential breach of contract actions there, if there's securities violations with any prior selling of stock or convertible notes or anything like that in the business, any of these things that could really put the business at risk, legal changes, political issues that could come up. So identifying any potential legal threats on the horizon or existing legal disputes, again, is going to be a big part, because that's a disclosure obligation there. So all of these things together, if done fully and thoroughly are going to put the business in the best position possible to seek and find equity investment from outside investors.